Welcome back. Well, the 3 p.m. move didn't really play out in any direction. It's just status quo. 31,800 looks like the equilibrium for the bank Nifty and 12,000 to 12,050 for the Nifty. So we can discuss individual stocks then. Mitessh and Prakash with us for BTST calls. Mitessh, I'm sure you're avoiding the index. If not, you can give us the call and your BTST calls.
No, Anuj, I think we have taken out long positions. And I think on the index, we'll wait it out. I think you're right to say that because the follow through on the bank Nifty did not happen. So I think the Nifty also has kind of gone back into a shell. For the time being, I think index trading may not be as rewarding. So focus on the stocks. The stocks which I have are a buy on or a BTST on SRF if it crosses 3250. Above that, buy with a stop at 3225 for targets of 3310, and Infosys is a BTST with a stop at 708 for targets of 724.
Okay, all right, Prakash, what are your trades?
Equitas, I think that looks good to me. Target on the upside is 115, stop below 107. Hero Motors looks a tad weak. Possibly we could see a slide to 2375 zones, stop above 2435.
All right, gentlemen, thanks for those trading calls. By the way, some more stocks that are really feeling the heat now. JSPL is one of them. It's down 5.5%. Actually, most of the metal stocks are weak. JSW Steel, Vedanta, most of these names are down, but JSPL is the one that's fallen quite a lot. Deepan, what is your take on metal stocks? Obviously, it's a trading move. Yesterday, we had favorable news from Europe, so they were all up and about. But in terms of portfolio, is there anything that you'd recommend?
So I think we are constructive on metals and valuations are at attractive levels. And we are seeing that the companies are able to take mild price increases. And to an extent, I think Indian steel manufacturers are shielded from a lot of the imports, at least at low prices. And there is some protection available. And I think as and when we see recovery in steel demand, these steel companies should do quite well. I think what goes in favor of the listed steel companies is that the balance sheets have been in great quality despite the downturn. And a lot of them have taken their break-even point even lower, and some of the excesses done in previous cycles have not been repeated, like going in for massive expansions or M&A activity domestically or overseas. So from that aspect, I think Indian steel manufacturers have been quite circumspect, and they've managed the downturn over the last few months pretty well. And now I think that the worst is over, and we should gradually see volumes as well as prices pick up. Operating leverages will come into play, and we could see much higher earnings for steel companies, and that could even trigger a re-rating of the P multiple for these companies. So positive on steel manufacturers, and they will have this volatility on account of global factors and what happens in terms of China and US and other geopolitical events. But if you take a longer term view, like 12 to 24 months or so, I think steel companies can give at least market or slightly outperforming returns over the market over the medium to long term.
Okay, all right, Deepan, we'll leave it on that note for today. Thank you very much for joining in. Appreciate your views. Well, as CNBC-TV18 celebrates its 20th birthday, Sunil Singhania, founder of Abacus Asset Management, rang the opening bell today. He joined us in our celebrations. There was the morning opening bell. Just showing you the footage once again. The entire team was there along with Sunil in the morning. I was also there, of course.
Different clothes you were wearing.
I hadn't changed for TV at that time, Anuj. But yeah, it was fun chatting with Sunil offline as well. And then, of course, we did get him in our studios, spoke to him about the market, things that he's liking at the moment, and ideas for investment. He talks about whether green shoots are visible on the horizon or not. Here's more.
The broader markets have seen this kind of polarization, which we have never seen earlier. But I think it's a matter of time. At least we are very hopeful that this breadth will, again start to become more wider. And we are already seeing it in the last couple of months that even stocks which are not the usual 10, 12 stocks have started to participate. In fact, even if you see Nifty, the rally lately has been in stocks which erstwhile were not moving. So corporate banks, telecom, for example, recently a little bit of pharma. So it's spreading a bit.
How would you characterize this rally? Is this a risky liquidity driven rally like we actually saw in 2017? Or are you seeing green shoots in the fundamentals?
No, I would be very honest. I think on the economy front, we still have to see green shoots. But at the same time, we have seen in the past that the major reforms or the path-breaking reforms happen only in these stressful times. And I think that is what maybe the market is factoring in. So we have seen a few very, very path-breaking kind of announcements made. And the hope is that between now and February 1, when we have the union budget, more such reforms or more such announcements might be in the works. The other thing is, as you rightly said, I think liquidity is available in the system. And by liquidity, I don't mean the equity liquidity, but general financial liquidity. The problem is that the confidence and faith of the financial system in the overall economy is low. And therefore, the whole liquidity is right now just lying with RBI, maybe in bank balances with RBI. And that is a matter of time. As and when confidence reignites, I think that liquidity you will start to see in the system.
Have you added telecom stocks? Because it's the most under-owned stock, Bharti, where practically there's no retail holding. Have you been lucky enough to add, or are you adding at current levels?
So we have a very small offshore fund. There we have a big allocation to Bharti, and we were lucky that it paid off like in a week's time. So I think telecom is the biggest consumption play, I would say. The only thing is that it's a sector which is prone to massive technological change and massive investment. So you have to marry the two. So I would not say that it's a play that you buy and forget it for 10 years, because technological evolutions are going to be massive. But it's a great consumption play.
One space that it might be hit by large disruption is autos. It has already. I mean, people are not buying cars; they prefer these radio cab services, etc. What do you do with names like Maruti?
You mentioned about disruption. In fact, yesterday I was speaking to someone, and a very important point they made. It says real estate can be under stress because of lower car sales. Because in a city, which is like in the Western world, almost 20 to 25% of the space, open space, is parking. Yeah. And if you don't drive your own car, you don't need to park. Yeah. So if you go to Manhattan, the parking lots make huge money. Yeah. But anyway, coming to the car sales, even if you look at India, obviously we have huge underpenetration. Vis-a-vis 800 cars per 1,000 people in the US or 200 in China, we are at like 25, 30. But having said that, I think the concept of second car is now no more as relevant as it used to be earlier. If you actually see last 5-10 years, Indian car sales on an average have grown only 6% in volume terms. Obviously, Maruti was gaining market share, so they grew at 10% in volume terms. But I think the call is whether the growth is going to increase from these levels or reduce.
What's your
And my view is that it cannot increase from these levels. So obviously you are going to face a lower volume growth, and in an environment like India where your cost inflation on a normal basis is at least 6-7%, you will have to increase your prices. It's like cigarette companies. The only way you increase your profits is by increase your prices. And up to what price can you increase? Up to what point can you increase the price? So I think I'm not very sure whether I would be looking at buying a consumer or a passenger vehicle company at 30-35p.